Good evening. This is Larry McMillan with a market update recorded Sunday evening, June 7th. I'm going to be out of the office early in the morning, so I wanted to get the recording out tonight. It's been a tremendously strong week again on the markets, and we're seeing a lot of overbought conditions, but no sell signals. The S&P has now made a new relative high several times now, and really it seems set on going for the all-time highs. There could be modest resistance around 32.60 where a gap begins, but then the all-time highs are at 33.30. We're really not that far from, either one of those. The modified Bollinger Bands, though, are setting up as a sell signal, but not. We don't have a confirmed sell signal yet. The average SPX has broken out above the +4 standard deviation band, though, which will eventually give us a sell signal. This is often the first indicator to turn bearish, and sometimes it's a little premature, but it's really the only one that's going to give you a sell signal right off a straight up move like this. Equity only put call ratios are plunging. There's more call volume now than we've seen in a long time. For example, calls on the CBOE, equity only calls on the CBOE on Friday were the highest in our database, which goes back 20 years. I don't go back farther than that, so it's possible, but unlikely that there would have been more calls traded. So that's amazing. The most calls ever traded in a single day on the CBOE. That was Friday. We see similar statistics across the board. The standard put call ratio, equity only put call ratio, is now down to levels not seen since February 2004. Again, amazing that that could be at a level that it was at 16 years ago, more than 16 years ago. Because in general, the put call ratio tends to rise over time. So not only has it overcome all of that, but it's plunging to extreme lows. Now, in 2004, that we were coming off a big bear market bottom in 2002, so it had been a while building that up. Now we're building it up much faster, although we seem to be coming off a huge bottom as well here. So it's indicative of the fact that we are very overbought once again. Just for the record, as we saw a couple of other times when looking at these past very extreme lows on the put call ratios, especially ones that occurred in the spring, we typically had a summer correction of, say roughly 5%, and then a more severe correction in September, October, but nothing, astounding really either in that case. The weighted put call ratio also plunging. It's not nearly as low historically as the standard ratio, but it is also still on a buy signal, and they both will remain on buy signals until they roll over and begin to rise. Market breadth has been spectacular again the last couple of weeks. Both of our breadth oscillators are not only on buy signals, but they're at the highest levels in their history. Now, we take these things back into the 1990s, and that's really quite amazing. So both the New York Stock Exchange and the stocks only breadth oscillators are at the highest levels they've ever been. So while that means they're very overbought, it's also a positive thing, meaning this market has huge momentum, and it really takes a while to work something like that off. Um, New highs are dominant over new lows. In fact, there were no new lows on Friday. Hard to believe, but actually it was the case. And I can remember it wasn't just a couple of months ago when there were no new highs. So things change quickly. Anyways, volatility is still one area that's not in an overbought condition at all. VIX is still remaining relatively high, closed Friday around 25 or so, and it still had touched its 20-day moving average. It's probably closing below that now, so that's a modest bullish condition. The 20-day moving average crossing below the 200-day moving average on VIX would solidify another bullish condition there. Meanwhile, the spike peak buy signals remain in effect as well. So volatility is the only thing that's not really in an overbought state. Pretty much everything else is. All we can say is continue to ride the buy signals, roll up the calls or the bull spreads, whichever you have, as higher strikes are reached, protecting your profits as you move along. We're probably going to have a very severe, like 1 day correction here, maybe down 100 or something like that, because it's just too overbought. But it doesn't look at all like this thing is ready to roll over and let's say retest the lows or anything like that. So we would be waiting for confirmed sell signals and break of S&P support before we even considered something like that. So enjoy the week and visit our website, optionstrategist.com. We're having our next Saturday seminar in 2 weeks on June 20th. So thanks for listening and good luck trading this week.